Welcome to Matters Financial and Geopolitical from a Frontier. Thank you for stopping by. Let me start with something I learnt. The Bitcoin has an indicator called the GTI Vera Convergence Divergence Indicator, which detects positive and negative trends. And it apparently flashed a sell signal for the first time since April, suggesting there could be further downside as Bitcoin halts its recent monster rally. We're currently at 7,800, and we should keep an eye on that. But as you know, I think the defining characteristic of this bull run has been Chinese flight capital. I wrote that piece over the weekend, Bond Yields in Tilt Mode, and I was saying that the US curve is inverted. Typically, curve inversions are harbingers of recession, but that markets and prices exhibit patterns of correlation, and essentially my perspective is that it is the correlation that has exerted a pull effect on US yields, and therefore the recessionary signaling of the yield curve should be discounted. I appreciate the US economy has slowed down, but I also believe that there's going to be some import of tariff-based inflation, which will take the inflation rate above 2%, leaving little or no room for maneuver. And Powell, I listened to him, he said using monetary policy to push sufficiently hard on labor markets to lift inflation could pose risks of destabilizing excesses in financial markets or elsewhere. My question to you is, did Powell sound like a man about to deliver 85 basis points of cuts? US 2-year inside day demark, the euro-dollar rally seems short-term capitulation. This is a chart from Sun Chartist, admittedly from yesterday. The market is sending out invitations for a rate cut party and waiting for the Fed to turn up. JS Blockland, markets really think the Federal Reserve will cut rates soon. Implied probability of a September rate cut is now 96%, July 70%. And then I take you to Tariff Wars, who blinks first, something I wrote in July last year, and I said, don't worry, be happy, seems to be the market prediction, which it was then. But I was remembering that I'd spoken to a Standard Chartered macroeconomist who said the precursor to this trade war was witnessed in the 1930s, and then the world economy cratered. The global trade wars that followed the harsh tariffs imposed by the Hoover administration in the early 1930s, following the stock market crash of 1929, deepened the trough of the Great Depression. Worldwide economic hardship led to political restructuring and eventually to World War II. And have a look at this chart from Stockboard Asset, which kind of models the 1930s and today.